Okay guys, welcome to another video. This one is a continuation of a series that I'm working on these SPACs, these special purpose acquisition companies, doing reverse mergers with these private companies. This is a really exciting space right now. I think there's a lot of money to be made. It's a unique opportunity to get in early in a company, before the deal is really finalized and the stock really shoots up. So I think it's a good opportunity for short-term traders. And I think it's also a good opportunity for long-term buy and hold investors to get in on these early stage growth stories before these companies take off. The problem is some of them are real and some of them are fake. There's a lot of garbage companies out there that are sort of exploiting the SPAC business model to do an IPO they otherwise wouldn't be able to do. So it's really important to look at these with a very critical eye. And that's what I'm going to do today on APXT. They're a SPAC that is looking to acquire this private company called AvePoint. They're a software company. They provide a Microsoft-based cloud solution for data management and migration. So I'm going to tell you the bull case for these guys. I'm going to give you 5 reasons why it makes sense to buy this company. I'm going to follow up with the bear case and give you 5 reasons why they might not actually be such a good deal. And at the end, I'll weigh them all up. I'll give you my opinion and I'll help you decide if this one is a good deal or something you need to stay away from. Okay, so before we get into the bear and the bull case, let's talk first about the basics here. So first up, if you look at this SPAC, this APXT company that's been formed to go out and acquire specifically a cloud technology software provider, it's taken them a year to find a deal. They just announced it back in November. And, I think the key thing here with this particular one is the management team. You look at these two guys, Jeff and Brad here, they have a really impressive resume. They've not only developed, I think, really deep expertise in technology and cloud, but I think they've also got some pretty good knowledge of taking these companies public. And these guys come with the deal, which I think is really good. I think their expertise is being injected into AvePoint and is going to give them that senior level management expertise to help them grow. Now the deal itself is pretty vanilla. It's a moderately sized SPAC. It had an initial market cap of $570 million, and they've struck a deal with AvePoint that if it closes will create a $2 billion company. Now if we take a look at AvePoint, I think one of the key things here is that these guys are not a tech startup. They've actually been around since 2001. They were founded way back then, and ever since 2003, they've been very tightly aligned with Microsoft, and they've been in the business of converting data into SharePoint since the very first release of SharePoint back in 2003. Now, for those that aren't familiar with SharePoint, it's a key component of the Microsoft Cloud offering, and it certainly predates the cloud even. It was a document management tool way back in the day, and it was sort of the default solution for that kind of need within small and medium-sized businesses, and it very quickly grew into large enterprise class companies as well. So typically anybody that uses the Microsoft suite is going to at least consider SharePoint for document management, records management, and now a broader range of solutions that enable team-based access to document sharing. Now AvePoint did something really smart back in 2014, and they moved to a subscription model. So prior to that, they were selling their software on a perpetual license basis. They moved into the same subscription model that Microsoft is now using to sell their Office 365 products and all of their software, in fact. And, they're able to do the same thing now that Microsoft is, which is to recognize that recurring revenue stream on a per customer basis, which is absolutely key. It lets you get into a customer and get that recurring revenue month after month after month on a per user basis. So your revenues actually scale as your customer base grows and scales. And it's been really good for these guys. As soon as they made that switch back in 2014, their revenues absolutely took off. And also in 2014, that was when they were named Microsoft Partner of the Year. That's a really big deal. There are a ton of Microsoft partners. I've worked with many of them myself. I've worked in IT for over 25 years, and being named Microsoft Partner of the Year and actually growing to this size as a key Microsoft partner, in fact, the top Microsoft partner, is a really big deal. You don't get there unless you really know what you're doing and you have a really competent team in place with some real products and real services. And they have the numbers to reflect that. They're talking about 7 million cloud users, which is actually 3% of the total Microsoft cloud user base. That's not a small number. When you think about the penetration that Microsoft has out there in the cloud space, it's really the default solution for office productivity right now.
What's the upside potential?
Okay, so let's get into these bull case points. Number one, these guys have a real product. Like I said, they're not a startup. They've been around for a long time. Their current cloud offering is based on software that has, grown and evolved over literally the last 2 decades. It's very, very mature. It's very feature rich, and they're able to leverage all of that past experience into the current product offering. And when I say it's a real product, the part that I really like is that it solves a real customer need. I know from experience, I've worked with a lot of clients that will buy the Microsoft Cloud tools, and they're sort of underwhelmed by the capability. And they're sort of scared off a little bit in terms of how much more is left to do. Microsoft basically gives you the tools to build business processes and practices and actually run your business, but they don't close that last gap, which is actually, how do I configure these things securely? How do I use them to drive my business? What about backup? How do I get my data into this tool? What about governance? How do I control roles and rights and access to my data? Microsoft gives you the basic building blocks, but they don't put it together at a high enough level for a lot of these large organizations to actually make use of. And that's where AvePoint solutions come in. They sort of sit on top of the basic building blocks of the Microsoft tools, and they deliver that last mile of added value. And, this is especially key right now with work from home. And I think that AvePoint is positioned here to catch a little bit of tailwind from this work from home model. I've seen this with the clients I work with, where suddenly you have people dispersing from the office. They're going home. They're connecting to office networks over VPN, but they're coming in from unsecured devices. These are home PCs or laptops that the kids might be using, whatever it is. And so it's really, really difficult now to manage access to company documents now that they're being accessed on these unsecured devices. So point number 2 here is I like the software suite. I like the fact that it's not just one thing, it's many things, but they're actually targeting 3 complementary solutions. So one of them is cloud backup. A lot of Microsoft customers are surprised to learn that there's not really great backup capabilities embedded in the cloud offering. If you want really feature-rich backup solutions that can restore a single file point in time or whatever it is, that's actually not there in Microsoft. You need some third-party tool to do that. The second thing they do is records management. SharePoint is a good document repository, but it's not really great at records classification and compliance and privacy and governance and all those things you need on top of a real records management system. They have a solution here that will transform SharePoint into plain old document management and give you full-blown records management. And then the last thing they do, which is really cool, this last broad solution is data governance. And this is a real problem for a lot of these larger customers. They have all these data, but now more than ever, it's really, really important to manage who has access to the data for what period of time. Can you offboard them properly when they leave the company, or do they still have copies of your sensitive information? How are you managing all that? They have a really good solution for that management layer on top of their data. Number 3 is just the fact that they're riding Microsoft right now, right? Like Microsoft's cloud penetration is awesome. The growth story is really, really good there. And these guys are positioned like nobody else to ride that growth wave into a ton of Microsoft customers and get a slice of that recurring revenue the same way that Microsoft is. Number 4 is the fact that there's no real meaningful competition in this space. And I can personally attest to this. I've worked for clients that have gone out looking for solutions like this, and the landscape is really, really sparse. There's a few small players, but it's really difficult to put together a solution that does all of these things and has all of this comprehensive functionality right now. It's oddly not well represented in the market. And the last point here is the financials. And I have to say, the financials across the board are really, really bullish. These guys have great numbers. They have a recurring revenue stream, for example, right now that's already $115 million. They're projecting 36% growth into next year, which is a really, really good number, right? It's not a rocket shot to the moon by any means, but 36% growth into next year on that recurring revenue stream, and I can't emphasize enough how important that recurring revenue stream is, they don't have to do anything except touch up a customer base on renewal to keep recognizing that revenue. There's not an expensive sales cycle attached to it the way there is for a new customer. These guys have no debt, no real debt to speak of. They have $250 million in the bank. They're in a relatively secure financial position, and their margins are good. They have an EBIT margin right now of 10%. That's rare in tech companies. They call attention to that in their presentation materials, and I think they're right to. A lot of tech companies with higher multiples than this don't have the same levels of profitability right now. It's pretty cool to see in the financials for this one.
Let's talk about risk.
Okay, so first off, as much as I like the product suite that these guys have, and as much as the fact that I think it's a really good, solid solution, I'm really, really concerned that Microsoft itself is going to step into this business. Microsoft is still relatively immature in terms of the cloud offering. They've been moving hard into cloud over the last few years, but it's really about getting those foundational elements in place. And I think sometimes they've neglected the bells and the whistles and the higher level management tools. And companies like AvePoint have come in and filled that gap, and they've produced these higher level things up the food chain. But 2-3 years from now, is Microsoft going to step in and say, hey, you know what? Customers are asking for a better enterprise backup solution in the cloud. We've just developed one. We've added it to Azure, and here it is. If they did that, they would actually crush a key component that these guys are actually offering in the marketplace. I think the exact same thing could happen in data governance. SharePoint is notoriously bad at managing user access and roles and rights and things like that. Microsoft could remedy that within a couple of years, at least to the point where a solution like AvePoint for data governance is not as attractive in terms of the gap that it fills. I think Microsoft could potentially crush that one as well. I've actually talked with customers that have used some of these solutions in the past, and the recurring complaint I've heard again and again is the support within AvePoint. It's lacking. These solutions encounter a lot of really, really difficult situations out in the wild when they're migrating data across different platforms. They encounter bugs. Customers call into support, and they get frustrated, right, when this kind of stuff doesn't work and it stalls a migration or an implementation. And I think that when they try to recognize some of this aggressive growth go forward, their support function could be a key bottleneck. Now, you look at the valuation, and it's a little shaky to my mind, and I'll tell you why. The initial deal had them valued with a multiple of 9 times revenue. Fair enough. Now at the current price, $16 a share as I record this video, that would put them at a multiple of about 14. Now, if you look at the comparable companies that they've lined up themselves in terms of their investor presentation here, and if you look at those three in particular in the middle here, all three of these have very deep technology suites, key technologies like AI and the like. AvePoint is very shallow technology, right? It's good stuff, it's feature rich, and it's capable, but it's not really, really deep. It's not software that couldn't be easily replaced by other things. But hey, you know what? This works as long as customers keep paying, right? And the proof is in the financials. Customers are buying this stuff. They are paying for it. They do see value in it. So as long as that continues, maybe that's not a big concern. But point 4 gets back to the same thing. I think that even today, this problem can be solved by cheaper, less capable tools and a few consulting dollars. You can get some other Microsoft partner in to glue something together, and you can get this done. You can put data governance in place, you can do a migration, and you can do a little bit of backup. You can get it done without engaging AvePoint, and I think that's their competition more so than a directly competitive product. It's these professional services firms that could easily do the same thing. And point 5 is the one I'm really, really concerned about. It's the fact that a lot of their past growth and their past business has come from SharePoint migrations of one version to another, and that was certainly a big problem to be solved in the past. It was really, really difficult to move your data and your rules and things like that from one version to another. That's gone now. SharePoint is in the cloud. It's now going to evolve as a service. There's no longer going to be this problem to solve of moving data from one version to another. So these guys now need to pivot into data governance, backup, and data loss protection. I think they're doing that. You can see that in their product. But I think a large chunk of their previous revenue is now gone, and their business model for that is gone as well. Can they successfully pivot into the future? Okay, so what's the last word on this one? I think that as long as these guys can stay out ahead of the feature evolution that's happening in the Microsoft cloud, they will continue to do well. They just don't want to be made obsolete by Microsoft themselves. So I think on balance here, the bull case does win by a slim margin. So that's it, guys. I hope this one helps. If it did, please give me a like, consider subscribing, ring that bell, and I'll see you on the next one.